that, the auto ancillary space has been very interesting. LKP Securities is positive on a whole host of auto ancillary stocks. They've put out an exhaustive report with names like Craftsman Auto, Endurance Tech, Sona BLW topping their list. But there's also so much happening in the EV space. So let's talk about that. Ashwin Patil, who is the author of that report, joins in now. He's a senior research analyst at LKP Securities. Ashwin, hi, good morning. Before I talk to you about that report, I also want to understand your view on TVS Motor. They've announced this bonus preference share of 4 non-convertible redeemable preference shares for every 1 equity share held. So certainly this is positive for shareholders, given the additional payout. It's like a large one-time dividend that they're giving. But it seems a bit unwarranted at this point in time, given that the company has large capex plans, they have big debt on their books as well. Don't you think this would, not go down too well with the street? Just your basic understanding of TVS Motor.
TVS Motors has been one of the best performers on volume terms, over the past few years. They have beaten Bajaj Auto and Hero MotoCorp as far as their volumes are concerned. But when we go down to their profitability, they have recently just, surpassed the 10% mark on the margins front, on the operating margins front. And they had been promising that since a long time, but just, they are creeping and crawling slightly to achieve that because their costs are slightly higher than especially on the marketing side are higher than that of Bajaj Auto and Hero MotoCorp, and they have to still they are having the number 3 position in the two-wheeler space. So I'm not really very positive on TVS Motors from since a long time, but the stock has moved up. The valuations are also not really very supportive. The market is cheering the volumes, but I am really, slightly on the skeptical side. So this preference share issue with a lot of capex, as you said, on the background with the debt also, may not attract that many investors. I think so. The market is definitely, the best judge of whatever is happening in, any particular stock. So I think that TVS Motors, it should correct a bit from these levels because the valuations are not at all supportive as compared to the likes. I mean, always it has been like that the valuations are quite too high at premium without the financial performance that is expected and that should go or gel with this kind of valuations.
Correct. Take your point entirely. So you are a bit skeptical on TVS Motor. One, it seems a bit unwarranted that they've come out with this preference issue, given that they have high capex and debt. And two, the stock has run up a lot. Got that. Now, the other big development that took place in the auto space is the government announcing this e-vehicle policy, right? They're trying to promote India as a manufacturing destination of electric vehicles. Tesla could be coming in very soon, setting up their manufacturing unit here. What does this mean for the auto ancillary space that you track very closely? Which are the companies that could be big beneficiaries of the government opening up India as a manufacturing hub for EVs?
See, this EV proliferation that has been happening in the domestic markets is definitely positive for a many auto ancillaries, especially, those who are catering, those who are EV agnostic. I mean, many of them are, catering to IC as well as the EV segment. And, this is an EV, those companies which are, like Sona BLW, I would say that they are one of the preferred stock, I would say, within the auto ancillary space, because out of their total order book of about 240 billion rupees, about 78% is, it will be going to the EV manufacturers. And Tesla is like their number 2 client. And they entering into India and the manufacturing of semiconductors, the laying of plants. Yesterday also we saw that the JV between MG Hector and JSW and the plans that they have laid is going to be a big thing in India. And companies like Sona BLW, then there is Sansera Engineering, which also will be benefited out of that. There are several companies within the space of auto, ancillaries, which would be looking to benefit out of this, because they are, they can have the best of both the worlds, like the IC as well as the EVs. So whichever proliferates, they will be having the best advantage of that.
Okay, all right. Ashwin, hi, good morning. Prashant here. Let's talk about some of your picks in that note that you put out as well. And Craftsman Auto catches one's attention. You know, it's from the highs, it's come off. The high was about 5,400. It's about 3,800 now. But it's been one of those outstanding performers, right, since listing. Slow kind of start, but then really took off. What's the thesis here? And I think you're putting out a price target of about 6,100 or so on this one. Just your thoughts on Craftsman. Yes.
Yeah, see, Craftsman Automation, we have been like a bullish, I mean, quite bullish on the stock since its IPO when it came in 2021. So, since then, we have been the first to come out with a report on Craftsman Automation, the IC. And, since 1800 levels, we have been tracking it, and it has been a fantastic performer since then. They are catering to the commercial vehicle sector, they are catering to the EVs, then they are having a presence in the non-auto, the industrial segment as well. And all the three businesses have been performing well. They have recently done the acquisition of DR Axion, which is a Korean company and catering to likes of M&M and Hyundai Kia. And they have been, supplying their products to these companies, which are definitely doing fantastically well, because M&M, we know that they are the number one player on the SUV side on the volume front, and Hyundai Kia is also quite a strong player in India. So, and DR Axion is also having strong margins, close to about 18 to 19%. That is, completely lifting up the margins of their aluminium business product. So yeah, they have got a wide, range of products. Though they are catering to the commercial vehicle segment, that dependence has gone down significantly, and therefore, with the strong margins close to about 20-22% that the entire business is having at this point in time, we are quite bullish on this stock. At 1350, again, we have slightly cut down the target, because the stock has come down a bit, and now our target stands close to about 5,100. But definitely, I mean, the cut is not because any fundamental reasons, but because of the valuations, and the stock moving down slightly. Therefore, we still maintain a strong buy on the stock. That has been the top pick in our portfolio.
All right, Ashwin, a final question before we let you go. Then on tire stocks, you're negative, right? It's because of the big spike we've seen in the raw material, that's natural rubber?
Exactly. See, that the natural rubber prices have moved significantly, and most of the tire stocks are, in a capex mode. They are, coming up with a lot of capex everywhere. Their margins are going to get hit because of the natural rubber prices, which have gone up. Even there is some sort of, instability on the crude side. The dependence on crude is also going to take a toll, on their overall margin performance. So we have, we are not really very bullish on the tire space.
All right, not very bullish on the tire space. Got it. Lots more to chat, but we have, we'll take this to another day. Thanks, Ashwin, for joining in and giving us your thoughts. We have the